Hi, good afternoon. Yeah, yeah. How you doing? Very well, thank you. How are you? Well, I hope you get better. Yeah. Yeah, good, thanks you. Did it all go okay? That's good. It's terrible. Hi, good afternoon, everyone. My name's Oscar. I'm 36 years old and I'm English, and I am a principal at Edenred Ventures, which is a venture arm of a French listed employee benefits business. And we invest 500k to 5 million euro tickets in software businesses in Europe, aligned to future of work, professional mobility. So a lot around EV transition, e-commerce and fintech, but specifically corporate payments. Thank you.
Hi, my name is Tommy Breen and I'm a senior advisor at the Growth Stage. So we're a capital raising platform supporting growth stage businesses, as our on the nose name gives away, with their capital raising. So what that means is typically we're working with businesses looking to raise a minimum of a Series B round, upwards to much later rounds. So in monetary terms, probably companies when they're looking to raise around 15 to 20 million dollars of institutional capital, right up to into the hundreds of millions in some cases. Outside of that, I'm also a mentor at Founder Institute, so I have a lot of experience working with founders from the earliest stages, going through building their MVP and their go-to-market strategies and testing and all those things. So yeah, hopefully I can offer some insights or some value today.
Good afternoon, everyone. I'm Antonio Baccari. I'm the founding partner of Field Venture, an early stage venture capital firm based in London. We invest up to Series A with tickets between $500,000 to 1.5 million. We invest in four main verticals: energy, healthcare, manufacturing, and e-commerce. In companies that have at least one Italian founder globally. We launched our first fund in 2020, and now we are fundraising our second fund. I'm also a mentor in several accelerators across Europe, from Techstars to different universities. And I've been an angel investor in the UK for the past 10 years. So I've invested my own capital, but also I've seen a lot of companies within the UK ecosystem.
Oh, thank you very much for that, gentlemen. That was brilliant. Some do's and don'ts that you often come across when it comes to early stage fundraising. By the way, don't worry about repeating stuff you might have said in the past. And also, please do use different logics for both the do and the don't. I guess we can, again, start in the same order. Oscar, Tommy, and then Antonio, please.
Sure. Okay, I'll go quick. Do number one, do know your financials and do have a really credible business plan and thorough understanding of your cash flow, because there's a kind of perception sometimes that these founders think that the understanding of the numbers and the financials doesn't matter. Venture capitalists are financial driven, numerical people. They obsess over numbers. So please do really know your numbers. You will not raise the capital unless you are very numerate and literate on that topic, and I would say don't obsess around valuation. People get totally obsessed, founders, on valuation, and I would obsess more on picking the right institutional backer for your business, the right personality fit, and someone who shares the same vision for you. And whether you raise it 25 million or 27 million, I really wouldn't obsess over that, and people do. So that's my other piece of advice for the don't.
Thank you, Tom.
Yeah, I would say on the do is, making sure you're going after the right investors and making sure you're matching your pitch to their thesis. So if you're a business and you don't have any, Italian founders, for example, you might tell Antonio, it'd be a complete waste of time because very clearly they only invest in businesses with at least one Italian founder. So making sure you're going after the right investors with the right thesis and making sure you're tailoring your pitches and your emails accordingly to make sure you get attraction for them. And then I would say a counter or, don't is spray and pray. Don't just send the deck everywhere and with the same generic email to everyone, because you won't get any response from that. So it's a waste of your time. And, before sending it out and going to investors, making sure you are actually a VC backable business and that you're ready for VC investment.
Yes, I would add in terms of the do's, try to create an empathy with try to engage with investors in a way that you generate some empathy towards what you're doing. In the very early stage, this is pretty much a trust business, so the investor needs to trust what you're trying to do and see beyond all the numbers that need to be there. But at the early stage, it's very difficult to put some real numbers that then will come alive. So investors are aware that in the future things can go differently from the way you are seeing them now. But at the same time, they need to trust that you will be able to navigate through all the different problems that you might face going forward. In terms of things you shouldn't be doing, I think it's building on what others have already said. Don't try to focus on anyone that will give you money. Try to understand also what kind of money do you need, what kind of investor do you need, who is more functional towards what you're trying to achieve with your solution. Don't think that it's just a money exercise, because at the end, money is going to last a certain amount of time. Then you will need more money. But if you manage to build a connection, a partnership with your investors, then it's going to bring you way more value than just the amount that they've invested in it.
Wow, that was amazing. Thank you very much to all three of you. I really appreciate that. Right, you. For those of you that have just joined us then, this is Startup Fundraising Q&A 148. We'll be here for the next 48 minutes, and we're here to help founders with whatever questions you have on your fundraising journey. There are literally no wrong questions, and there's no need to be shy. You could ask us anything on fundraising, whether it's investor outreach, pitch decks, data room, valuations, equity, due diligence, grants, angel investors, venture capital, corporate venture capital, crowdfunding, exits, and all that jazz. Now, if you're in our Microsoft Teams call, which is audio only, all you have to do is drop your question in the chat. We'll then give you the mic, and then you can take it away with your question. If you are on the live streams, whether you're on LinkedIn, YouTube, Facebook, or Instagram, please be aware that unfortunately we are unable to monitor your question there live. So you'll have to join us here on Microsoft Teams. There are two ways you can do that. There's a link on most of those live streams. But if you can't find that, all you have to do is visit our site, startuptoscaleup.club. You find today's session, which is Startup Fundraising Q&A 148. You click join. It's a quick registration that gets you a link to your email. And through that link, you can then jump onto this call here. Once you're here, as I said, just drop your question in the chat. I'll then give you the mic and you can ask the team. If your questions, by the way, are not on fundraising, then save them for the other rooms we run. On Mondays, it's talent. On Tuesdays, product and tech. On Wednesdays, growth. Thursdays, fundraising. Second Friday of each month, it's UK startup law. And third Friday of each month, it's UK startup finances. They're all from 12 to 1 p.m. UK time. And they're all available on our website. You can register and RSVP to any of them. By the way, when you're there, you may also want to join our WhatsApp community. We've got groups of founders, investors, and operators that you can interact with. Just a reminder, next week is our last week this side of the summer, and then we'll resume in September, so bear that in mind. So we won't be around for about 5 weeks, or 6 weeks rather, I think. So let's go on to our first question. I'll put that in the chat. And by the way, panelists, if you'd like to drop your LinkedIn URL in the chat and perhaps a quick description as well, feel free to do that. Hopefully people, either the ones that are here live or the ones going through the recording, may want to reach out and at least follow you on LinkedIn. So this is, okay. Biometric security tech founder in London. She's pre-seed and she's an IT security expert. We're developing biometric authentication for financial institutions. We want to raise through a safe, but our concern is investor pushback on future conversion terms. How do I create a safe agreement? How do I create, safe agreements that are attractive to early investors whilst protecting future valuations? That's an interesting one. One more time, we can start with Oscar, then we'll go to Tommy, and then we'll go to Antonio, and then we'll change it after. Oscar?
Sure. So a safe is interesting, and it'd be interesting to know whether it's the safe is suggested by you or suggested by the potential investor. But typically what you really want is for the safe to convert to equity after a trigger event that is very achievable and very believable. So in terms of your plan, you want to understand, what are the key metrics that you will get to on conversion? And the other thing is, is there a discount attached to it? So if it's triggered by a future equity round, a formal priced round, what is the discount attached to it? Typically, you see 20%, but it can also be up to 30. So I would make sure the trigger event is achievable and not going to kill you, basically, for that.
Yeah, I would add to that. So when you're talking about safe, typically that's what they use in the US. Some cases they have a valuation cap there. I would avoid using that because future investors don't like it. So if you had a valuation cap at say $1 million and something happened, you did really well with the business, or something massive happened between then and the trigger event, and the valuation was 10 million, obviously that's not very attractive for new investors. So I definitely stick to the discount of 10 to 20% roughly, and that should give good incentive to the investors investing in the safe, or I'm guessing if it's UK, it'll be more like an advanced subscription agreement. So that should be attractive to them and gives more protection to future investors. They'll, particularly if they're institutional, like VCs coming in later on, they'll be pretty familiar with this and, will understand 10 to 20% discounts pretty normal. So that should be it. And then also, just in case the trigger event doesn't happen by the set date, so say it's like a 6-month or 12-month date in the trigger event, making sure you have a long stop valuation in there that doesn't over dilute you. So making sure that you get the investors now to agree that the valuation on that date will be something that doesn't dilute you more than 20%, say, from this round. So those are things I would consider.
Yes, I'm not a big fan of safe for the reason that you mentioned before. I think you need to find a balance between an evaluation that is achievable, and therefore the investor knows more or less how much he's going to get. But also, I think the investor in a safe, especially in Europe, has the challenge that most of the times that evaluation doesn't arrive in a very easy way, and they are putting money very early on in a venture, and all the upside they get is like 20% compared to someone that is coming a year and a half later when things are way much better than when they invested. I think there should be some other form of upside in terms of for the investor. So you give the discount and you put a floor cap on the valuation, and your aim to do the round at something that is a little bit higher than the cap, so that at least that early stage investor has the discount and a little bit of upside. If numbers go way beyond, then obviously it becomes a challenge for future investors. But at the same time, if you find like a relatively safe number, if you can put a cap, you want to raise next round at 10 million, then you put a cap at 10, and then you aim to do a round around 12 or 13. That will give additional value to the safe investor. The way it's structured today, or at least the way it was built in the US, was that when they were going to do the following round, then the valuation would be much higher than the floor, than the cap. Sorry. But nowadays in Europe, the number is generally more or less the same. And so, it's a lot of risk for very little premium, and which is the discount, if it's the only discount.
Thank you very much to all three of you, gentlemen. We'll now go on to a couple of more questions. Another one that was sent in, and I want to answer this because they sent this last night with a lot of pleases, because they're going through negotiations today and next week, and they want to try and wrap things up before the investors disappear. And then after that, we'll go on to, I hope I'm pronouncing it right. By the way, I've given you the mic. Is it Hagos? Hajos? How do you pronounce your name, buddy? I've given you the mic, Hajos, so you should be able to speak if you want. If not, I can maybe try and change the settings to make you a presenter, if that helps. But anyway, let's go on to the second question. For the others, if you want to ask our team anything on your fundraising journey, just drop your question in the chat, please, and then I'll give you the mic. So this one is from somebody in Edinburgh. He's got a digital therapeutics for mental health, and they've raised seed, and now they're negotiating a Series A. So our digital mental health therapeutics platform is negotiating Series A with competing term sheets, one proposing a high valuation cap and the other requesting significant board control. How can we optimize these terms to secure favorable valuations without sacrificing founder autonomy? Should we pursue a balanced approach by offering capped board seats with observer roles? Focus on adjusting the valuation terms. Let's go to Tommy, then Antonio, and then Oscar, please. What would you do here?
So it's just when you say high valuation cap, it sounds to me like one's offering a higher valuation, meaning the other's offering lower and wanting more board control. But anyway, so I'm quite a bit confused. But I would say anyway, the
way I
valuation.
understood it, Tommy, is that the one with higher valuation wants board control, and the one with lower may not want as much. That's how
And
I
what
understood
percentage are they taking? What percentage? The other thing, are they taking 3% or are they taking 33%? Because there's no way they're going to have any board seats or board composure if they're taking 6%. So what percentage stake are they taking? Do you have any idea? No, okay.
So yeah, like I would say, not getting too hung up on valuation and getting the highest valuation is kind of important at Series A. And like, as we've seen over the craze that happened in 2021, just because you can, there's investors competing and willing to offer you a huge valuation doesn't mean it's the best thing for your business. It might feel like that right now, but you've got to grow into that valuation, and they'll set pretty stringent milestones or expect you to hit them through those periods. And if you can't hit that and you burn through the cash and you need to go and raise and you haven't really grown into that valuation, you're going to be left in the uncomfortable position of, at best, raising a flat round, or worse, doing a down round. And I assume with the high valuation beyond the board control, there's probably going to be maybe some unfavorable liquidation preferences in there. So I would say from, just thinking yourselves realistically, for the higher valuation, forget about the board control at one side. What are they expecting? And do you think it's really achievable? And be honest with that. And is it more sensible to maybe, I'm not saying like a huge discount, but maybe a slightly more sensible valuation that, you can actually grow beyond for your Series B round. And then, that'll also allow you to think, is this the right investor? Can you maintain board control? So I would try and think about it in those terms. And, the highest valuation isn't always the best deal. It often comes with, as you're seeing, covenants attached, whether it's board seats or liquidation preferences and participating liquidation preferences. So I'll just be careful and look into that a bit deeper. But, if you've got two term sheets as well, you can try and negotiate by, I guess, playing the two off each other and trying to get to what your ideal scenario is. And I'd also the investor that's asking for the more board seats or more board control, I would also ask, if you haven't already, to speak to some of their existing portfolio companies. They will introduce you to the ones they want you to speak to. I would also go through the portfolio yourself and pick some others that they don't suggest and say, I'd like to speak to these as well, and get some feedback from founders they've worked with and what they're like to work with on the board.
Thank you. And actually, Tommy, you were right. I'm sorry, I misunderstood it, but I'm hoping she actually meant that rather than what she wrote, because she does say one higher valuation and the other board seat. So that doesn't make sense, but I'm assuming my assumption,
your interpretation's right,
yeah. My assumption was that she meant the other one around. Antonio.
Well, I guess when you are fundraising, you need to do your due diligence on who you're bringing on, and I guess it's more about building a partnership that is a long lasting than being very transactional. So when someone is asking you to either shrink your evaluation or to get more board seats, whatever is the ask, I mean, there is a limit that they can be considered fruitful for both sides, and that's where you need to kind of get the conversation going. I mean, if they have a significant board control and then you basically don't manage they manage your company, ultimately you are the one that is driving everything within the company. So if you basically want to go and be an employee for someone else, then you just go and find a job outside. You don't work as a founder. So it's about finding that compromise that is not only in the numbers or in the activities that on the number of board seats they want, but it's more on the way they want to work. And so I agree with Tommy. If you have a chat with the companies where they've already invested, and you would be surprised to hear how many negative feedbacks some investors get out there in the market. They might be appealing in terms of evaluation or some of the things that they promise, but it's probably easier to do a due diligence on the investors rather than on startups, but it's something that generally founders completely avoid and try to get the best, whoever gives more money or whoever comes with the best offer. But sometimes it's about value, it's not about the money.
Yeah, I'd agree with that. It's about the value, not about the money. And you can be very honest with them. Pick up the phone and say, you offered me ABC. I really would like X, Y, Z, and here's why. And I think certainly on that board position, if they're going to be taking anything around that 10%, you should accept them likely being on your board, and hopefully you value them as advisors in any case, so you should want them on your board. I think if you don't want them on your board, I would actually be stronger and say I wouldn't take their money. This is a marriage, it's not a fling. If you don't want their money, if you don't want them on the board, it's probably not the right personality fit. So I would also consider that.
Oh, that is harsh, but true. Thank you very much for that. Right, we've now got 32 minutes to go. Hagos or Hagos, can you speak now? Are you audible? I've made you a presenter. Can you hear us? Right. Okay, well, here's what I'll do. I'll make you an attendee since you either don't want to talk or are unable to talk. So let's see, somebody in the lobby, Jamal. Okay, sorry, just accepting people. All right, well, just a quick refresh of the conversation then, and then we'll go on to the next one. So this is Startup Fundraising Q&A 148. We're doing this to help startups and founders in the conversation with whatever questions you may have on your fundraising journey, whether you need clarity or ideas on investor outreach, pitch deck, data room valuations, equity, due diligence, grants, angel investment, VC, corporate VC, crowdfunding, exits, and all that jazz. all you have to do, literally, is to drop your question in the chat here on Microsoft Teams. We'll then give you the mic and you can ask our team. If, however, you are on the live streams, whether you're on LinkedIn, YouTube, Facebook, or Instagram, then you'll need to join us here on Microsoft Teams because we can't monitor your questions there live. Quickest way to do that is via our website, startuptoscaleup.club. You go there, you find today's session, which is Startup Fundraising Q&A 148. You click join, a quick registration will get you a link to your email. And through that link, you can join our audio-only call here on Microsoft Teams. Once you're here, then simply drop your question in the chat. You'll then be able to, basically, we'll give you the mic and you can ask the team whatever question you have. I won't leave it for last minute because then we're very likely to run out of time. So here's a question that somebody put it in the chat. I don't know if the panelist can read it, but I'll read it out loud for the live streams. The founder of Coffee Roasters, a small micro business rooted in the traditions of Ethiopian coffee, operating in a very compact space in London. Maybe a small business, but I carry a big vision to grow into one of the UK's leading artisan coffee roasteries, connecting people through culture, sustainability, and quality coffee. What I lack today is not passion, commitment, or clarity, is the financial support to fully enter the track. I'm standing right at the gate with everything ready to go, and I'm asking who would consider supporting me financially. But basically, the idea is, how does a person or a business like this that is not tech, is not kind of, doesn't really have that hyper growth potential because there's a certain level of labor intensive requirements. How does something like this raise? Maybe we can start with Antonio and then Oscar and then Tommy. How would you go about raising if you were in this business? Antonio?
Well, we'll start from going out there and looking for people that have some kind of connection with what you're doing. So if you're doing a business around coffee, I would say who are the typical investors in coffee business, or which are the people that could have a connection with Ethiopian coffee, and people that have interest in coffee in general. For example, I myself, as an angel investor, I invested in a business in the UK that was a coffee business that was made between a guy whose father was probably built the first roastery in the UK, and his co-founder was a DJ. So apparently they found themselves, and they were from Melbourne, which is considered. Although I'm Italian, I realized that apparently Melbourne is the world capital of coffee. So everybody likes coffee in Melbourne, and they are very knowledgeable about that. So they got together. Yeah, I couldn't believe it. But I have asked every person in Melbourne I've met, and apparently it's true. And so they created this company just by the passion that they both share for coffee, and they grew this company from what was worth at the time a few million pounds to a 250 million business. So it's at the very beginning it's a relationship between you as a founder with the idea, and as you said, you don't lack the passion or the willingness of doing this venture with someone else that basically shares the same value but has probably the money to fund your venture. And so it's a little bit of a due diligence exercise. You can't go out there and reach out to all the investors because most people won't be interested in your business, but for sure there is a niche, and especially in the UK there is a massive niche for coffee. So there are plenty of businesses of coffees. There are coffee shops opening every single day. So it's a great opportunity for you to be in the UK. It's just I would just advise you to do a little bit of research and an exercise to understand who can be the best investor. Most likely it's going to be like a high net worth individual that shares the same values and passion that you have.
Thank you. Oscar?
That was a very good answer. So I will add a little. I think focusing on investors where there's a big lens on kind of community benefit, fair trade, organic production, environmental protection. I think so. Impact and ESG type funds would be a good place to look, in addition to the high net worths. But I do think this isn't your typical venture case. It's not a piece of technology wizardry. It's not going to be super scalable. The market is highly competitive. It's very difficult to differentiate yourself in a coffee shop. There are many, many, many coffee shops. So I think high net worth would be your most ideal, with a big focus and love for coffee. Otherwise, I'd go more for kind of impact-y or ESG type pitch.
Thank you very much. Last but not least, Tommy, please.
There's been some really good advice already. Oscar, just his answer there made me think that potentially, I don't know, going to some of the bigger coffee producers, roasteries, the likes of Nescafe, and some of them have impact programs where, I don't know if they'd invest in micro roasteries in the UK, or if they, a lot of their impact funding that they do through their social initiatives is for growers and stuff in Ethiopia. But I definitely look on their websites and see if there's any avenues there. And, as Antonio said, I'd look for people with a connection to your business, try and connect with the Ethiopian diaspora in the UK. And then the other thing I do like, the kind of more basic, obvious stuff, is I would look at, look up your local enterprise office and find out if they have any support, particularly if you're going to be employing people locally. Maybe there's like tax breaks, or they have some funding and grant pools for some of these businesses. And I'd also go on the Enterprise Nation website as well, because they've got loads of information on startup loans and stuff. British Business Bank give startup loans. And so I'd look at all those kind of avenues as well, because I guess it's a more traditional business than tech. So maybe you can actually model out a clear business plan and potentially get, funding for early stage funding from some of the banks that support these types of businesses. So I definitely look at Enterprise Nation and try and find your local enterprise office and seeing what types of loans and other funding are available for businesses like this. But best of luck.
I think that's a good point. I think high street banks would absolutely look at this. If you could make a good pitch to HSBC or Barclays or NatWest, they will have commercial arms that are entirely set up to help people like you. So I think high street banks is quite a good shout.
Thank you very much. In terms of banks, there is something called StartUp loan, and they do give some money out. The rest needs to, basically, you're either liable or you need to have some collateral. But, British Business Bank could have something, various other institutions as well. And on top of the amazing stuff that Tommy, Antonio, and Oscar gave you, here's what I would do, because as soon as I saw your question there, Hagos, I thought of Brewdog. The Brewdog, they've had a series of raises, a series of rounds, Rob. Most of them have been some kind of crowdfunding exercise. And the first one, I believe, was 500 something pounds, and they had over 1,300 investors. In order to have a successful crowdfunding campaign, you need to have a very large amount of the money already committed. And the chaps here have given you some amazing advice. What I would do is I would make a list of 3 things. Number 1, I would look at the highest paid executives in sort of outlets out there. I don't know, just for argument's sake. The directors of Costa Coffee or Nero or whatever, but especially people that have recently left and were at very high salaries, because they can invest in SEIS schemes in your company, and they already know the business. Because what you really want now, you don't want just people that will give you money, you want people that will open doors for you. I would do that for these. I would do that for, I don't know, maybe supermarket chains or port lounges or people in these spheres, right? So that's my first, let's say, bucket of potential angel investors. The second bucket of angel investors is either founders who've exited companies that are in similar fields or investors who've invested in similar stuff. And the third bucket would be to make a list of all the events that have loads of investors, that have various people that are within that sphere, startup events that you can go, especially angel ones, and you can go and serve your coffee for free at their events. If you can find those, I think that would open a lot of doors. But again, the way I see it, your sort of almost ultimate near future goal is to have a very large and successful crowdfunding campaign. I have to say, though, that can be very time consuming and it can also cost you quite a bit of money because, in essence, it's a marketing exercise. But if done right, it can do absolute wonders. I hope that helped, Oscar.
Yeah,
Sorry, Antonio, did you want to add something? Go on.
Yes, because no, that's a very good example, and I was one of the first investors in BrewDog back in the days, and I remember that they did exactly what you said, but also they managed to create a big sense of community. So there were people who wanted to work for BrewDog. There were people that wanted to invest in BrewDog, and they also spread the verb. So whenever someone was coming through, they were opening a new round of investment because they've done like 2 or 3 rounds on Crowdcube at the time. But every time they were coming to open a new round, like the previous investors and also new people will basically tell other people. So it was a big marketing exercise, but also the sense of community that managed to establish, and your product is probably suitable for this kind of things, managed to engage way more people that they thought at the very beginning. So if you go to events, you let people try your coffee, and then they might find 2 or 3 people, then they will probably bring you even more investors to your crowdfunding.
Absolutely. And another, in those angel lists that I mentioned, another thing that I would focus on is to look at people who've actually invested in public stocks in similar large companies out there. Often you can find those people. It's not always easy, but often those are shareholders that will be published somewhere. So another call to go after. Right, I hope that helps. Carlos, I've given you the mic. Are you audible? Can you hear us, Carlos? Right, let me try and make you a presenter instead. Hopefully that should help. Right, Carlo. Right, Carlo, are you able to talk now? Oh my God, what the hell is going on? Right, well, I've made you a presenter, and that's not working. Anyway, I'll read it out loud. God. I'm launching an off-grid cabin business on leased farmland near major UK attractions. The model is low capex, eco-friendly, and designed to scale through landowner partnerships. What types of grant funding or public support exist for sustainable rural tourism startups, especially ones focused on nature, biodiversity, or attracting visitors to countryside areas? That's an interesting one. What about this? We can start with Oscar, Tommy, and then Antonio, please.
Sure. Well, this again is really not at all the venture capital sweet spot, but I do know, because my mother's family are farmers, that there are UK and national schemes for rural business. There's one called the Rural England Prosperity Fund, REPF, that does help medium-sized rural businesses, communities, social enterprises kind of grow, and they do give grants, raising from 5k to 300k. There's one called Farming Equipment and Technology Fund. So there are support networks for this, but I think one way that if you're thinking of partnering with the landowner, just do a deal with the landowner. Just raise money from the landowner directly. I think that would be a much easiest way to do it. Then he or she, as a landowner, also has equity and has upside. So I would actually first put a call, would be trying to do a deal with the landowner to see if they could back you as well, because it sounds like to build this business you won't need a huge amount of money. So if you have a wealthy landowner, they'll be able to back you themselves.
I wouldn't have thought of that. Jeez. Would they have money, Oscar? Because I mean, if this is doable, this is pure gold. But I would have thought they're quite tight at the moment. What do you reckon?
I would have thought that, yeah, the small farms, 100%. The small farms of say 50 to 300 acres are tight. There's little money left at the end of the year. But if you're on a farm which is bigger in scale, or you're on a piece of land where the actual estate owner, maybe he or she works in London, maybe he or she's abroad, maybe farming is one of 3 or 4 businesses. There are plenty of rich farmers. Don't worry, there are plenty of rich farmers. Yeah,
that is very interesting.
Yeah,
I'm still quite puzzled by that. Very interesting.
Well, if you think of the government money being thrown at wind turbines, solar panels, development of cottages into rentals, like wedding venues. These farmers make wedding venues now. They make golf courses, they make driving ranges. They're very entrepreneurial people, farmers.
No, that's
and many
true.
of them are absolutely not as hard up as you'd think.
That is very cool. That's brilliant. Carlo, you want to buy lunch if you can get him to Oscar and to open your sort of window into the world of farming opportunities. We also was meant to have Guy Pengelly, who's just started his funds / advisory on agrotech, but the sucker had an investor call at exactly 12 o'clock that he couldn't refuse. So I get it. I can't remember. Did we say Antonio?
Yeah, I mean, I guess just to add, I would probably have a look at the Innovate UK if they have some kind of grant or other activities that could be focused on either sustainability or supporting rural areas in the UK.
Good point. Mr. Breen.
I don't really have anything to add. It's a bit outside my area of expertise, but it just goes to show actually Oscar had a pretty decent answer. So it's worth coming on here and asking a question anyway, because it's beyond the world of tech. You don't know what backgrounds the panelists have. So it's just interesting to hear that.
Super duper. Thank you very much. Carlo, I hope you've heard that, and I hope you found it helpful. If you do have any questions, just let me know in the chat and I'll give you the mic. Now, I know some of you may be in environments where you can't talk. Some of you may be in environments or in a situation where you don't want to put your heads and your name out there. But believe you me, it does make for better conversations, and it definitely gets you much better answers if you're able to ask the question yourself. I saw you were about to type something, Carlo, so feel free to do that. We've got 11 minutes to go. We may have time for a couple of questions. We're here to help founders with whatever questions you have on your fundraising journey, whether you need ideas or clarity on things like your investor outreach or pitch deck, data rooms, valuations, equity due diligence, grants, angel investors, venture capital, corporate venture capital, crowdfunding, exits, and all that jazz. There really are no wrong questions, and there's no need to be shy because it's a learning curve for us all. if your questions, by the way, are not on fundraising, then save them for the other events we run. Mondays it's talent, Tuesdays product and tech, Wednesdays growth, Thursdays fundraising, second Friday of each month it's UK startup law, and third Friday of each month it's UK startup finances, which is actually tomorrow. They're all from 12 to 1 p.m. UK time. You can RSVP and register to any of them via our site, startup2scaleup.club. Actually, when you're there, you may also want to join our WhatsApp community. We've got some amazing groups of founders, investors, and operators that you can join there. And by the way, next week, it's our last week this side of the summer. And then we'll resume back in September. I think, 8th of September will then be our first session. So this is about a 5-6 week break. Now, I think we can go on to another question. By the way, just a quick reminder to those of you that are on the live streams, whether it's LinkedIn, YouTube, Facebook, or Instagram, we are unable to monitor your questions there live. So if you do want to ask our panelists anything, you'll have to join us here live on Microsoft Teams. It's audio only, by the way, which means you can join us from anywhere. Quickest way to do that is via our site, startup2scaleup.club. Find today's session, which is Startup Fundraising Q&A 148. Click join, quick registration gets you a link to your email, and through that link, you can then pop into our call. So for those of you that are here, just drop your question in the chat and then I'll give you the mic. So VR platform, so virtual reality platform for professionals training near London, the seed stage. And he goes on to say, our VR training platform is negotiating seed funding with investors requesting board seats. Again, similar to the previous one, I guess. What is the best way to manage board composition to ensure founders retain control while satisfying investors' needs for oversight? Should we consider offering observer rights as a compromise? And how could this impact future Series A plus investor expectations? That's very interesting. How about this? Tommy, Oscar, and then Antonio, please.
Yeah, so the question, similar question earlier, like Oscar said, if it's somebody that's investing and they're getting 3%, like they just shouldn't be getting board seats. If they're investing for bigger amounts of equity, then it's different. So that's a starting point. Without knowing here we don't really know if it's angels or seed stage funds investing. But like the point would be they need to be investing a considerable check, and there needs to be a good reason for them being on the board. Like if it's that they just want a board seat for the sake of it, and they're saying, well, that's part of what their offer is, and it'll open doors. Like if it's angels investing and they can open up doors for the business, they should be doing that anyway. They don't need a board seat for that. If it is an angel investing a sizable amount of money compared to everyone else, like if they're effectively leading the round or it's a seed stage fund, then, I can kind of understand the position of wanting a board seat, but you shouldn't be taking on like more than 1 or 2 seats at new board members at seed stage. So I would definitely be trying to like push back, and, worst case scenario, if you have to take on 2, and I don't know how many of their from the company are on the board now, but you'd want to, get messy if you start having super voting control shares or something like that, or else you'd have to add another independent to the board and that will vote in your favor. But like, you don't want to be at seed stage with a board of 5 people. It's just a bit crazy. And, as you pointed out yourself, like it would just be really unattractive when it comes to Series A and later stages. So I would try and, push back and try and understand why they want them. Board observers is a potential way around it. But again, you don't want like a room of 5, 6, 7 people in your board meetings at seed stage. Like it just make the meetings longer and take up more time. So like if it's a seed stage like a seed stage VC or an angel writing a sizable check, and you feel